We all saw it here yesterday, the Bank of Canada making another significant interest rate cut. The central bank slashing its key policy rate by 50 basis points. That means it's now at 3.25%. That is the fifth straight cut after, of course, that year or so of increases. The bank also indicating, though, that further cuts would now be more gradual, shifting from its previous messaging that continuous easing was needed to support economic growth. Now, the country's big banks also lowering their lending rates to match the decrease from the Bank of Canada. So we're talking TD, CIBC, RBC and BMO say they'll be dropping their prime rates from 5.95% to 5.45%. Those changes taking effect tomorrow. Let's talk more about this, though, if you're in the market for a mortgage. Leah Zlatkin, a friend of the show, mortgage broker, joins us now. She's a lowerrates.ca expert. Leah, it's good to talk to you this morning because people have been focused on mortgage rates as they went up. And now as the Bank of Canada rate has been coming back down here. I want to first, though, talk about fixed rates because fixed rates are more tied to the bond market than the Bank of Canada's key interest rate. What's happening in the fixed rate side of the business?
Absolutely. So fixed rates are interesting. They typically follow the bond yield, as you mentioned. And right now they're sort of, fluctuating a little bit. They're maintaining some stability around the 5.5 mark, 4.5 mark, depending on what you're looking at. It competes very well with the variable rates right now. If you're looking for something more stable, you're looking for, a first-time home buyer, for example, you probably want to ebb towards the fixed rates. If you're somebody who's more interested in, potentially following the market as it goes down, if you think bullishly that it's going to continue going down, then variable might be where it's at for you.
Yeah, and the variable has come down, of course, significantly because it could have follows in step with what's going on with the Bank of Canada. Are you getting more calls for people saying, you know what, maybe variable's the way to go? Because for a while, people felt like they were getting burned on it. Now they maybe feel they can take advantage of it.
Yeah, some people are very bullish on the market. They think variable is going to continue going down. As you mentioned, the Bank of Canada indicated that it may not continue going as quickly as we've seen in the last little bit. Yeah. So if you are bullish on it, certainly a good time to go variable. But for me and for most of my clients, I'm recommending, don't jump ahead of yourself. If you're somebody who likes stability, I would still aim for a 3-year fix until we see what happens with this market.
Yeah, that's true. And of course, we don't know what's going to happen when Trump becomes president, how that could have an impact on the Canadian economy overall, right? So we'll pay attention to that. In the meantime, December 15th, there are some new rules coming that are going to make some changes that could affect people buying and selling houses. Talk a bit about the significance of that, Leah.
Yeah, there's big changes coming. So for anybody who's got an insurable product or somebody who's looking at products under $1 million right now, they're actually going to be opening up that gap. So now you can actually put less than 20% down for a property up to $1.5 million.
Wow.
For a lot of people who are looking for townhomes, who are looking for, that first-time home, this is a really big improvement for them. And so for a lot of people, you're only going to require 5% down for the first $500,000 and 10% down for the next $1 million. So that's really good for a lot of first-time home buyers, especially if you can qualify right now. And a lot of people are getting those applications ready.
So what's it like in your business right now? I mean, is your phone ringing off the hook? Because it seems to me like this would be an incredibly busy period based on where things are going.
Yeah, given the variable rates have come down, given these changes coming on the 15th, given some other changes that are, around us in the economy, a lot of people are getting very excited. A lot of people are calling. A lot of approvals are coming in, and a lot of people are getting those applications ready so that they're pre-approved by the time these changes come into effect.
Okay, let me just quickly circle back. We only have 20 seconds left, but that 1.5 million threshold, that was not just for first-time buyers, right? That's for any property.
That's going to be for anybody who's looking to it's going to be for anything insurable. So if you're looking to put less than 20% down.
Yeah. Okay. Fascinating. Leah, appreciate this. I'm sure we'll talk to you in the new year. So happy holidays. Good to see you again.
Thank you
Pleasure
so much
talking
for
to you
having
as
me.
always.